Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 27th of August 2019 and we're providing our analysis on silver prices, what happened today and what we can expect to see short term. So let's investigate. Last Sunday, we provided our weekly update, which concluded with the following words. Quote, "Well, the next few days will undoubtedly be quite volatile, and unless the President softens his stance on China, and we are not convinced that he will, we can expect to see the Dow deteriorate further, and gold and silver prices improve. The dollar will decline a little too, but frankly, it's still one of the best currencies amongst a bad bunch. Exciting times ahead, and $1,600 gold and $18 silver within the next 3 to 4 weeks is not an unreasonable expectation." Well, today we saw silver hit $18.04 at around 2 p.m. British Standard Time from an opening price of $17.64. It then dipped into the 1790s, and then at 3:55 British Standard Time retested the 1804 resistance level, and then, quite frankly, hurtled its way upwards to 1821 within an hour and a half, falling back only slightly to its now current level of 1817 at the time of writing and producing this podcast. A rise of 3% in one day, and silver's highest level since September 2017. Gold too rose today from an opening of $15.27 and is currently standing at $15.42, just $2 off its high for the day. A rise of $15 or almost 1%, but is some $12 lower than its peak yesterday. However, today we shall focus on silver, with the gold to silver ratio currently standing at 85:1. So what happened to cause this rise? Well, we reported on Friday the escalation of the fight between President Trump and China, and on the weekend and Monday that to some extent he softened his tone, albeit only slightly. And whilst Trump stated that China had offered to resume trade talks, assuaged some concerns in the wider financial markets, uncertainty prevailed as Beijing declined to confirm the assertion, and this uncertainty, in part, is why the Dow closed today down a further 120 points to close at 25,777. It's no secret, and we've reported extensively, that the trade war between the two superpowers has destabilized markets since it began over a year ago, triggering fears of a global economic slowdown and making safe haven assets more desirable. In addition to this, however, data released earlier today showed Germany's economy contracted on weaker exports in the second quarter and is now only a little way off being declared recessionary, and US home price growth also cooled to its slowest level in 7 years. The dollar index, whilst holding up extremely well, is down a little and has wavered around the 98 level, or just below it. Yesterday, we published a video entitled "Expert Views on Equities, Bonds, Oil and Gold." We've put a link in the description below, where we pointed out that many treasuries are now being offered at close to 0% interest, and in some cases with negative interest rates. This will almost certainly encourage institutional investors into gold, as the opportunity cost of holding it, as zero interest has now become in relative terms positive, and this will provide the liquidity and security they require. Of course, once gold becomes too expensive, some of those funds will find their way into silver, and today may indeed have been a precursor to that event occurring, or recognition that this is indeed a strong possibility in the very near future. Now we have to mention gold here as it is very important. Gold ETFs have seen increased interest in recent days and weeks, and the World Gold Council has announced today that gold ETFs have seen $2.6 billion in net inflows in July. It's only natural that silver, whilst will lag gold, has some considerable catching up to do, and we may now be seeing the start of that catch-up. Now, 2.6 billion is not necessarily a sign of major institutional investment, but it is a considerable sum compared with previous inflows, and this may very well be the start. Now, we have to look at the potentially toxic mix of events which are causing funds to move into precious metals, and especially into gold and then silver. We have the bond markets sending a signal that the US and many Western countries are moving towards a recession. The inverted yield curve announced last week is often a strong indicator of that happening. Strong demand by emerging markets and especially their central banks for gold. Brexit uncertainties in the UK and their impact on Europe. Italian political and economic difficulties. Issues with Iran, China-US trade war, potential US-Europe tariffs, Fed changing course, reducing interest rates, but will face problems as the amount they can reduce rates by are actually limited. Portfolio managers are readdressing their strategic asset allocations, and some are moving in favor of gold and precious metals. Mixed financial results from major companies and volatility of stock indices from what has been all-time highs. And last but not least, President Trump's Twitter feed also has an impact. Investors are confused by the constant mixing and remixing of these ingredients. And if one bears in mind that in 2011, gold rose some $500 in less than 9 months, there is no reason why this could not happen again. Now, our analysis at the start of the year saw gold peaking at $1,550 and silver at $1,750. This was against a background of the China-US trade war being settled and President Trump introducing a major infrastructure spend to boost the economy. These two so far haven't happened, and in fact, it now looks almost as if a trade war is relished within the White House, and China looks as if they are quite content to let it escalate, as they believe it will prove the downfall of Trump in the 2020 elections. Against this backdrop, but before last week's fiasco, we raised our forecast for 2019 to $1,600 gold and $18.50 silver. Now, it's not going to take a rocket scientist to see that it is quite possible that these figures too are potentially underestimating the situation, even from a technical analysis point of view, and allowing for a number of resistant points on the way. And without a military conflict with Iran, we cannot rule out, in fairness, gold potentially touching $1,800 this year, and silver $22.50. And next year, with the turmoil that an election could bring, we may very well surpass gold's all-time high in dollar terms and reach that magical psychological $2,000 mark, and silver then reaching between $25 and $27 an ounce. Do we see them going beyond that? It's possible, but through our analysis, not by much. We would seriously suggest that you ignore those channels talking about $10,000 gold and $1,000 silver, believing that the gold to silver ratio will reduce to 10 to 1. It won't, unless the dollar collapses. And we've stated time and time again, the majority of the world currencies will have to collapse before the US dollar does. The interconnection within the financial world, for those who truly understand this, makes this an inevitability, that other currencies will collapse first. And perhaps we shall cover why in a future video. Now we have to be fair and state that if President Trump strikes a deal with Iran, a trade deal with China, and still manages to juice the markets with lower rates, and this happens soon, then we shall see a re-emergence of the equity markets, gold and silver prices consolidating at current levels or even moving slightly lower. But we are not confident that all of this will happen quickly, if at all this year. President Trump is a disruptor, and a deliberate one at that. He may indeed feel that he has a few more months' disruption ahead before he needs to calm markets and undertake the necessary deals to place the US back on a growth track. If he does believe this and follows that path, our fear is he may be too late to achieve that recovery. Isn't it ironic that the one area that will serve to boost precious metals such as gold and silver will not necessarily be individuals actually buying the physical, though there will be an element of that, of course, out of pure supply and demand, but via the paper mechanisms that the pumpers accuse and have accused previously of depressing gold and silver prices deliberately all of these years. Perhaps that worm has turned. Now we shall report more on this in the coming days and weeks, as we want to witness what significant purchases, if any, have actually taken place today, or whether it is just a general increase in a relatively tight market. But nevertheless, things are moving positively for precious metals, and the geopolitical environment is suggesting that they will continue to be positive for precious metal prices. For as we stated in one of our recent videos, we can all look forward to one hell of a ride. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.